All right, tech enthusiasts, buckle up because today is all about the I empire. You guessed it, Apple. And they've been neck deep in headlines for all sorts of reasons. From impressive earnings to potential legal quagmires, it's been a roller coaster. Let's break it down. First off, let's wind the clock back a bit to the fiscal quarter that ended on June 29th, 2024. Apple reported its impressive earnings for Q3, with revenue ringing in at $85.8 billion, up 5% year over year. Way to flex those financial muscles, Apple. Earnings surged by 11% to $1.40 per share, breezing past Wall Street expectations. With such solid performance, the tech titan continues to prove why it remains a dominant force in the market. Now, what's interesting in Apple's revenue breakdown? Well, iPhone sales continue to be the company's bread and butter, contributing 52% to the coffers. Services, which include fan favorites like the App Store, iCloud, and Apple TV Plus, are not far behind, grabbing a 24% share. The rest, Macs, iPads, and wearables make up the remaining 24%. A diversified portfolio, huh? But it wasn't all roses. Apple had to grapple with cooling iPhone sales as the once-hot 5G upgrade cycle simmers down. Oh, and let's not forget about that pesky competition from China, which has been putting up quite the fight. Nonetheless, Apple's services segment is bailing them out with steady growth, offsetting some of the downturns in hardware. And looking ahead, there's hope pinned on the AI-oriented iPhone 16 and Apple's ambitious expansion plans in India to keep the numbers up. Meanwhile, fiscal performance wasn't the only game in town today. Apple got caught in the crossfire of Google's antitrust debacle. A federal judge has ruled against Google's parent company, Alphabet, alleging illegal monopolistic practices. Ouch! Why should Tim Cook be on tenterhooks, you ask? Well, Google's cushy $20 billion a year deal with Apple to be the default search engine on iPhones is on the chopping block. If Apple loses this golden goose, it might feel the pinch despite its nearly $400 billion annual revenue. Speaking of search engines, JP Morgan's analysts highlight a slew of possible moves for Apple. Think hitching their wagon to Microsoft Bing, DuckDuckGo, or creating their own search engine. The latter could drain resources to the tune of $10 billion and would still lose them $12 billion in revenues over 5 years, even if they dominate search queries on their own devices. Tough calls ahead, Captain Cook. To add a cherry on top, let's talk share prices. Thanks to stellar performance, Apple is trading only 12% below its all-time high after a 304% rally over the past 5 years. That's serious growth. If you'd parked $5,000 in Apple shares 5 years ago, you'd be sitting on a cool $22,000 today. Sweet returns, right? Yet today's turbulent waters have investors wondering, is it still worth diving into Apple stock? With looming antitrust challenges and tempered growth prospects, Apple still brandishes a hefty premium. But let's face it, in the wild tech jungle, Apple remains a titan whose path forward brims with both challenges and delightful possibilities. So let's hoist a glass of apple cider and keep an eye on this tech juggernaut as it navigates the choppy waves of the market. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.